Hey, good afternoon, everyone. Brett Wisnowski, Security National Mortgage Company. This is week 3. So our video this week, we're going to discuss jumbo loans versus max conforming loans. So that would be a conventional loan maxed out to the $548,250 maximum loan amount that is now permitted by conventional per this year's update, plus a second lien, and how those two things compare. So really, it's going to depend on your client. And as prices rise here in Austin, and our housing market demand continues to increase, or even gets to the point where it holds steady, but prices still tend to rise, we're going to see a lot more clients pushing up against that conforming max limit. And I think, of course, that's going to be an interesting time for us, but that's going to open up the question, hey, do we go jumbo? Hey, do we go with a $548,250 loan amount plus a second lien? So there's a couple different things that will factor into this. The first of which would be documentation. So depending on your client's specific situation, that will absolutely make a difference between jumbo and then the conforming max plus second lien. If your client has a fantastic credit score and they have 20 to 25% down, and they don't intend to pay any large principal amounts toward the balance of the loan anytime soon, then the jumbo is definitely a clear hands down. However, if that if they possibly have some losses on their tax return, so maybe cap gain losses, or they have a business on the side and they're a W-2 person, but that business is losing a little money, that may affect their debt to income ratio, because no matter what, the jumbo loan is going to take into consideration 2 years worth of tax returns, and it doesn't matter if they're a W-2 person with a job that pays them $20,000 every 2 weeks. If they have a loss on that tax return, that's going to be factored in. So that's something to think about. Whereas with the conventional loan, if I have a W-2 borrower, we have verified their income, we do not need to use a tax return. So that may make the difference there as well. And then, of course, we can fill in any difference in loan value with a second lien. So that's blanket, that goes for everybody. If you have a client that has excellent credit, they're a perfect borrower, but they tell you, hey, I only want to bring 10% down for this home, then the interest rate difference on the jumbo loan versus the conventional loan plus the second lien, it will likely make a lot more sense to go with the conventional loan than the second lien. And even though that second lien may come with a 5% or a 5.5% interest rate, the blended rate will likely be lower, and I'll show you an example of that here momentarily. But really, that's what we wanted to talk about this week, and depending on the feedback, this may be a multi-part series, just because jumbo loans do get pretty in-depth. So I wanted to give you this example, and I hope you enjoy the rest of my video. Comparison would look like, and I basically did this off my calculator, so it may not be 100% precise, but it's very close. So let's talk about your 10% down borrower. So your 10% down borrower, essentially, to get a jumbo loan would really need to be a unicorn. I mean, typically they're talking about 760 credit scores, maybe higher. Lots of reserves. I mean, I've seen up to 12 months reserves requested in these types of situations, so your borrower would have to be sitting on a lot of cash to do this. So purchase price is $750,000, down payment of 10%. This is what your client has to bring. They have $75,000 plus closing costs to bring. So that would give you a loan amount of $675,000. Jumbo loan, 30-year fixed interest rate, 4.5. This actually might be a little low, considering the 10% down. A lot of times the 10% down really does raise the premium on the rate. But this is just an example, just something I'm using my memory off of, versus a conforming loan plus a second lien. So your conforming loan, $548,250 at a 2.875 interest rate. That's going to be 81.22% of the entire loan value. So I'm not talking about the loan to value as it pertains to the purchase price. I'm just talking about the loan itself. So if the $675,000 equals 100%, this is the weighted amount. Then you have the second lien. So you have $126,750 second lien with an interest rate of 5.375%. And I actually just pulled this off of a second lien rate sheet just so it's accurate. 18.78% of that loan value, as we discussed. So your blended interest rate would be 3.344%, which is significantly less than your 4.5%. So in the down payment of 10% case, certainly makes so much more sense to go with the conforming loan plus the second lien, and then using 750 as a price point as an example. So anyhow, let's just say we raise the ante a little bit, purchase price at 850, but your client has 20% down in this case, so it makes it a little bit more competitive when it comes to the jumbo loan market. And anyway, so I checked into this, and 3% or a 2.875% interest rate with a small cost is actually pretty attainable today. So I'm just going to use that as an example. So $680,000 total loan amount, 80% loan to value. If you go the jumbo loan route with the 20%, you'll be looking at roughly a 3%, or as I mentioned, a possible 2.875% interest rate with a small cost to your borrower. A small cost in points. I mean, of course, the points add up at this much of a loan amount. Versus your conforming loan plus your second lien. So conforming loan limit 2.875, second lien $131,750. So similar to our 750 price point at 5.125%. So slightly lower interest rate. And then of course the weighted totals. And your blended rate would be, in this case, higher than your jumbo loan rate. So as long as your client doesn't have any documentation issues that may, make the jumbo loan more complicated, it's certainly in your client's favor to go with the jumbo loan in this example versus this example. So just to give you an idea, that's what it would look like on our end. This is what I would compare for your clients, for our mutual clients, in order to make sure that they're getting the best rate interest rate wise, and that everything makes sense for the financing piece. So and again, this is just an example, but these interest rates are fairly accurate. So I would definitely put a little bit of stock into this. So that would be an interest rate example on the comparison between the jumbo loans and then of course the first and second liens with a conforming loan. Of course, the other topic that we discussed a little bit ago was documentation. So depending on the documentation for your client in terms of the complexity of their tax returns, if they have any business losses or if they have any rental properties with losses, anything like that, that's something to consider before putting them through with a jumbo loan versus a conforming. But of course, there's cases where the 10% down, it makes total sense to go with the first and second lien versus the 20% down. But of course, at the 20% down, if it means getting the loan done for your client and making sure that we meet closing on time, that's an excellent option still as well, even at 20%. Of course, a slight difference in interest rate, but that's something that that your client can mitigate by possibly paying off that second lien early, doing things to lower their effective interest rate. Anyway, and again, according to the feedback from this video, I may go a little bit more in depth to the jumbo versus conforming loans if anybody would like to hear more about that. And again, it really depends on your client's specific situation, but in a luxury market, or you have clients that are, in the 700,000 to 800,000 range and up, of course, that's considered a VIP in our businesses. So of course, as a realtor, having a client with that, or having a client at that price point, you want to make sure things go smoothly for that client. And that's something that I can certainly help with, and I can certainly ensure by giving those comparisons, and then also presenting those comparisons to the client and saying, hey, we have 30 days to close. This is what you would need for the jumbo. This is what you would need for the conforming plus second, and basically analyzing what makes the most sense and then explaining that to them. I mean, really, it's all about communication. So handling these types of clients is something that I've done quite a bit in the past, and it's certainly something that I'm well versed in, and I'm absolutely happy to help any of my realtor partners that may have someone in this price point range that could use a little bit of expertise or a little bit of explaining, even if we're not working together. So certainly feel free to reach out if you have any questions. My contact information again will be at the bottom of the screen, and I look forward to hearing from you, and I look forward to next week. I hope you'll join me. Have a great week.